reaction. Let's talk now about the other breaking event at this hour. That's what's going to be going on with Toll Brothers. From retail to housing, frankly, to the entire economy, many people have been pinning the turnaround and the stock surge on the high-end consumer. And today, a big sign of life from Toll Brothers. You see the stock there. Talk about a surge. The home builder rallying on news that orders are up, and mean way up. It's up 15% in stock reaction. The company is speaking to investors at this hour. Diana Olick is going to be hopping on the call. But in the meantime, Diana, what are the most important headlines from Toll?
Well, and we'll bring you that breaking news, Erin, if and when it happens. But the real news, as you say, came late yesterday when Toll Brothers clobbered expectations with its preliminary Q4 results. Orders up 42% year over year. Closings and revenue fell 20 and 30% respectively, but that was also better than expected. CEO Robert Toll said in the release, quote, home buyers began to emerge from their bunkers in late March 2009, and the market continued to gain momentum up to Labor Day. Since then, demand has been volatile. Now, he attributes that in part to seasonality, but says more likely it's concern over unemployment and the overall economy. We know the high end of housing is still in real trouble. A new report, in fact, from Trulia.com today says that while homes over $2 million make up just 2% of the market, they account for 25% of all price cuts. Erin?
All right, Diana, thank you very much. So Diana is getting on the Toll call, and if she hears anything, she's going to come and update us. This truly, though, has been the story of the day. And add what Diana's talking about with Toll to this. A Move.com survey says 5% of Americans plan to buy a home next year. Is that a good or a bad thing? Well, it all comes down to this. How will it affect the high end, where everybody is pinning all of their hopes? Spencer Raskoff is Chief Operating Officer at Zillow.com, which tracks real estate prices around the country, has become the benchmark. Matthew Garrison is a real estate agent and director of the Matt Garrison Group, and our own Steve Leisman. Okay, good to have all of you with us. And let's just start with you, Spencer. What are you seeing? Because I know some of the headlines we've been hearing, at least until Toll, were all saying that we weren't seeing any sort of movement at the high end. So Toll really surprised everybody.
Well, Toll did surprise people, but, you know, the high end is still declining in terms of home values, just not as badly as other parts of the market. So the top 1/3 of homes in each particular city are down about 6% year over year by value. That compares with the bottom 1/3 of homes by value, which are down about 12% year over year. So high-end homes are still declining in value, but not as bad as the lower-end homes. Those percentages are almost reversed from a year ago when higher-end homes were declining more rapidly than lower-end homes.
So is it fair to say it is, I mean, things are still getting a little bit worse, not as worse as they were, but that it is a little bit better relatively at the high end?
Yes, relative to lower-end homes, things at the high end are starting to look better, but, you know, they're still declining at the high end. The big surprise is that foreclosures are starting to move upscale, and, you know, that is I think, what the market is probably not as focused on as they perhaps should be.
And what about you, Matt? When you're dealing with selling in Chicago at the high end, what do you see on the ground? Are homes north of $1 million, or even north of where you can't get Fannie and Freddie support at $629,000, are they moving?
Well, they're definitely moving. They're not moving at a pace that's going to burn off the inventory anytime soon, in my opinion. And, you know, that's one of the problems. If you price a home accurately and correctly in the market, there's buyers out there for it, and that's a positive. The problem, in my opinion, is that a significant amount of the inventory is overpriced and probably doesn't have a chance of selling.
So people haven't yet faced up to reality. Matt, are they getting financing, though? I mean, what have you seen in terms of when someone comes in, can they get a loan, and what change has there been in how much cash you have to put down for the high end?
Well, change, from 2006, the change has been massive. I mean, the bottom line is you have to have excellent financials and make it through stringent underwriting to get a jumbo loan right now. Change recently, we've seen a little bit of thawing. Rates have come down a little bit on jumbos. There are a little bit of more leverage products out there than there have been in the past. But the bottom line is, if you don't have solid financials, if you don't have under a 41% debt-to-income ratio, forget about it. You're not going to get a jumbo loan. And
Steve Leisman, I wanted to give you a chance, because I know you actually ran the number to make the point to people watching of how important the high end is. It may not be as many people, but in terms of its influence on the economy, wow.
So if you look at the expenditures by income on housing in general, numbers from the BLS, what you find is that people under $70,000 spend about $12,000 a year. All consumers, all income, $17,000, but then go up to above $150,000. You can see that number begins to jump over $40,000. And by the way, those percentages are less as a percentage of income as you go upscale. There's 32 versus 36 and 34 being the average. Well, let me just say two things, Erin, what the high-end homeowner does and does not have going for him or her. On the one instance, you have a natural bottom there, which is as the price of the home comes down, there's an income group that will certainly step up. That's true not just for houses, but for high-end cars, high-end stereos, everything. At the bottom of the scale, there's nothing below you there. What they do not have going for them, where I sort of question that 6% figure that Spencer brought up, is high-end homeowners can tend to be able to hold on to their homes for longer and don't have to do forced sales. That's why I think he said you're only seeing now those foreclosures. I wonder if all in, if price to go, the market clearing price on those high-end homes wouldn't show actually a larger than 6% drop, or even larger perhaps than the median home, because of the fact that those prices ran up so much in value.
Interesting point. What do you say, Spencer?
Well, you know, what's happening with higher-end homes is that they're representing more foreclosures. So in 2006, at the peak, the top one-third of homes represented 16% of all foreclosures. Today, the top one-third of homes represent about one-third of foreclosures. So, and it all depends how you define the top tier. I mean, we're looking at top one-third. So, you know, nowadays, a higher-end home, measured by the top third, is just as likely to be foreclosed upon as a lower-end home. It is definitely true that higher-end homeowners at the very high end can toe the line on price and don't have to cut price as quickly. And that's one of the reasons why higher-end homes can maintain their value better, because traditionally they have fewer distressed sellers in that segment. But this foreclosure data calls that into question.
Well, it's not a good sign at all. And, you know, Steve mentioned that, you know, there's a secondary tranche of higher-end buyers who may underpin the luxury market. But, you know, with the bottom of the market, I really feel like it's underpinned by government stimulus right now. And there really hasn't been any government stimulus in the luxury market. And, you know, that's
on the contrary, even the new extended tax buyer credit or home buyer tax credit, you know, has both salary caps at $250,000 for a married family, and home value caps at $800,000.
Another thing we have to think about here, which is that the government, the Fed, is providing plenty of support, along with the remnants of Fannie Mae and Freddie Mac, to the middle part of the market when it comes to financing. There is no financing on the other end. There is no mortgage-backed securitization market when it comes to those jumbos. It remains to be seen, Erin, who and what will step in to rekindle that market. I know you can get a loan, but my understanding is the back end, the part that really helps it, which is securitization, and remains moribund.
All right, and one final point to Matt, and I don't know if Spencer and Steve know this, and I believe I'm allowed to know this, Matt, but nonetheless, everyone's going to know it in a second. You're the listing agent on the house that's next to Barack and Michelle Obama's house in Chicago. So if we could use that as an indicator, if that won't sell, what will? What's the latest there?
Well, you know, I don't feel that house is an indicator for the entire market, because it's so special, because it's next to the Obama's house.
Yeah.
But even that house hasn't been immune to pressure from the market. A few years ago, I would have had that house sold before print, as we say in the business. You know, now we've gotten a lot of publicity on it. We've put it on the market at $1.899 million, and we've had a lot of interest, but no accepted offers yet.
No accepted offers yet. Wow. Steve Leisman, take that one right there. That goes in your little pile of indicators.
Steve, maybe you want to make an offer on it.
Yeah.
You know, I'm doing my kitchen now, and I'm having a hard time with the value prospects here. My home's declining in value. I'm going to put money into that thing, but my wife wants the kitchen, so that's the bigger X factor in the
And what does that mean for Lowe's and Home Depot? But well, I guess that's the next derivative, Steve.
It's a big part of it. I know it's another discussion, Erin.
It is another discussion.
But whether or not you're going to invest in that declining asset's a big question.
Right. All right. Thanks so much to all of you, and thanks, Matt, for the update on the house that is next to Barack and Michelle Obama's in Chicago.